go across to another management. We have with us B.santhanam, the CEO at Asia Pacific and India region, Saint-Gobain, joining us on the show. Hi, thank you so much for making time and speaking with us. Just wanted to begin by understanding as to what the expansion plan is, because there seems to be a lot of interest when it comes to the investors as well. The commentary of the company has been quite strong. Talk to me about the demand momentum and how you see the business growing over the next 3 to 5 years.
Yeah, I think for Saint-Gobain India, we are in a very nice sweet spot. There is huge aspirational growth. There is a shift in the value chain that is helping us. And we are very strong in almost all the businesses that we are in, be it in glass or in gypsum or in insulation, ceramics, abrasives, mobility. So in every one of the businesses, we have between 25 and 50% position in the market. So that's one of the reasons why we believe that we'll continue to make big investments. We did that even during the COVID. We did not pause significantly even during the COVID, just for the matter. Post-COVID, we have grown by 80% compared to the pre-COVID. 1920, FY20 versus FY24 would be close to 75 and 80% growth when the economy grew by between 17 and 20%. So we are really seeing a very traction for the range of products. What is more interesting is there is a premiumization that's going on in the market. So consumers are shifting up significantly, investing more. There is more spend per home, per car, per appliance, per industry. And second thing is that consumers are looking for solutions that aid sustainability. So they're concerned about carbon footprint, whether it's in residential or commercial spaces. Whether it's in industrial, they're looking at energy efficiency. So we really are in a very sweet spot in terms of the solution that we have. And that's really what is making it exciting for us. And apart from the fact that we have a fairly strong, the group has a very strong interest in India. India remains to be one of the most profitable and growing markets for the group. We are in the top 4 in terms of profits. So all of that come together. So we continue to have our significant investment that we make, we continue to do that. And on annually between 1,600 to 2,000 crore is what is a kind of investment that we continue to make. And all of them will be covering our glass, gypsum, construction chemicals, ceramics, mobility portfolio.
Right. Mr. Santhanam, just to get it clear, today your stock is quite excited in trade, smartly trading almost 5.5% higher. On the news that your company wants to invest 8,000 crore over the next few years. I want to understand how much of Saint-Gobain's overall business in India is captured in Saint-Gobain Security and how much is out of it. Because this commentary comes from your from the parent, if I'm not wrong. Overall business plan in 8,000 crore.
Yeah. It's a very small part of us is captured in the Saint-Gobain Security India Limited. So we have actually three companies. One is a pure private limited company, which is Saint-Gobain India Private Limited. It's not in the stock exchange. Other one is Grindwell Norton, which is really 20% of our turnover. The third one is Saint-Gobain India Security India Limited, which is very small. It's a very small part of it, but that business, though small, is performing smartly. Yeah. So I don't think you can reflect what we are planning to with the 8,000 crore actively on that Saint-Gobain Security India.
Mr. Santhanam, let's talk about the part of the business which is captured in Security, right? How much is your Capex plan? How much can you grow your business over the next 2 to 3 years, and what kind of profitability levers do you have?
We really have, that small company has very strong balance sheet, very strong cash flow. We really believe that there is a huge opportunity to grow in that segment that we are in. Primarily, we are in the three-wheeler segment. The electrification of three-wheeler offers huge opportunities. So the investment will be proportionate to the turnover of that business. We see very strong opportunities in related businesses, be it in railways, defense, and many other portfolio where glazing solutions are looked for. So we invest in those businesses, especially in that company, proportionate to its turnover.
I also wanted to understand from you, what's the differential right now in terms of any imported products versus the ones which are domestically manufactured? Because that was a worry earlier for the industry. Does that continue right now as well? And anything in the pipeline with the duties getting removed or anything of that matter?
Could you just repeat that question?
So my question to you is, what's the differential in terms of the pricing of the imported product versus the one which is domestically manufactured? Because if I have it right, earlier there was a huge differential and there was a lot of competitiveness which was there in the industry. Is it still a problem?
I think it is still a very competitive industry. Almost all the businesses that we are in, it's a very competitive industry, so there is no question. So there are some places where we believe that we can invest more, but that would require some kind of a policy guideline and intervention over the next decade, particularly in the solar glass. Any kind of investment in solar glass would mean some kind of affirmative policies from the government, because that business is intensely competitive, and we need to really look at that when we see a shift in the policy on that.
Does that mean that margins will continue to be a bit under pressure, or the upside will be limited because of the competitiveness that you mentioned? And also, if I have it right, I see that the company is looking at 10% volume growth going forward. Talk to me about that as well.
Yeah, so our margins are not under pressure. We have a very good price, cost, value mix. So our volumes, our margins are not under, by any stretch of imagination, under pressure. What we meant is there will not be a big upside on pricing as would have happened in an high inflationary period. But we still believe that there is a very strong volume growth opportunity. Apart from really looking at many other global value chain shifts that may give us other opportunities in many other businesses to invest more.
Okay, point taken. So, of course, the pricing might be capped, but the margins still remain very healthy where they are right now. And the volume-led growth demand potential is something that the company is quite optimistic about. On that note, sir, we let you go. Appreciate you making time and speaking with ET now. For the